大変お待たせいたしました。本日はお忙しい中、
Thank you for waiting and joining us today for NTT Data Group Corporation earnings result briefing session for the full fiscal year ending March 2025. Let me introduce today's presenters. NTT Data Group Corporation, Representative Director, President and Chief Executive Officer Yutaka Sasaki. Director and Senior Vice President, Head of Corporate Headquarters, Tadaoki Nishimura. Head of Finance Department and Corporate Strategy Headquarters, Keisuke Kusakabe. I'm your facilitator, Fukunaga, of the Public Communication Department. Today's presentation consists of two materials, the company presentation, and then the forecast for the fiscal year ending in March 2026, and which are both available for the download on the website under the investor section. Now, Mr. Sasaki will present the financial result for the year ending March 2025 and the forecast for the year ending March 26. Over to you, Mr. Sasaki.
Well, thank you for remaining here. Well, I was actually worried that nobody would remain here. I hope that you will still have interest in listening to us. Now, we'd like to talk about the earnings results. Moving to the next page for today. So we would like to explain the earnings results for the fiscal year ended March 25, followed by this year's initiatives and also the forecast. So firstly, for the fiscal year ended March 2025 earnings results. So this is the outline so far. Against the previous fiscal year, it is up by 271.3 billion yen in net sales and operating profit up by 14.3 billion yen and profit attributable shareholders of NTT Data plus 8.6 billion yen and new orders received up by 170.7 billion yen. Net sales and profit achieved the guidance, and the details shall be explained on the following pages. First, new orders received. Year-over-year, Japan segment grew by 100.7 billion yen. Overseas segment declined, excluding the forex impact. However, the FX impact contributed to the increase of 75.2 billion yen. The group at large posted an increase of 170.7 billion yen. Next page, please. Second, next sales. Against the previous fiscal year, Japan segment grew by 176.3 billion yen. Overseas segment declined, excluding the forex impact. However, with the FX, the segment grew by 96.3 billion yen. The group at large delivered a growth of 271.3 billion yen. Next page, please. Operating profit against the previous fiscal year. All the three businesses in Japan delivered an uplift by 34 billion yen. Overseas segment with a forex impact declined, and it was down by 15.5 billion yen, but the group itself was up by 14.3 billion yen. This slide shows the breakdown of the Japan segment results. As shown here, across all measures, including orders, net sales, and operating profit, performs very strongly. Please turn to next page. This is a breakdown of the overseas segment. And on this slide, North America, EMEA, and APAC, and these regional units results are shown here. The regional units, excluding the forex impact, were down in sales and profit, and we will need to continuously work on improving profitability. Next page, please. This slide shows how in the overseas segment, there's a global technology solution services, or so-called GTSS, and you can see the performance. GTSS enjoyed a strong performance of the DC and SAP businesses and grew both in net sales and profit year over year. Next page, please. Finally, let me next talk about the data center business. The investment year over year was about on par. totaling $2 billion and $706 million US dollars. The backlog year over year increased by $2 billion and 721 million US dollars, recording 14 billion and 974 million US dollars. So it's about 15 billion US dollars. Net sales year over year was up by circa 30% to 2 billion and 432 million US dollars. And the service provision capacity of the data centers has steadily increased, and it's around 1,500 megawatts so far, as shown on this slide. This is the status of the financial gains and losses. The result was minus 74.9 billion yen. However, against the guidance of the minus 81 billion yen, it improved by 6.1 billion yen. As per the interest-bearing debt balance, due to the aggressive DC business investment, the amount increased versus the figure at the previous fiscal year end. Next, let me talk about our direction initiatives for the fiscal year ending March 26. This slide shows the current position of our company in the global IT services market. In the net sales, we are currently ranked the 8th, while in the Japanese IT services market, we remain at number 1 in net sales as last year. In the data center market as well, our place remains at the 3rd place. Going forward, we will continue to accelerate the business growth to elevate our position. Given the current circumstances I have explained so far in fiscal year 25, we will focus on these on this slide. The first one is strengthening the regional businesses, and the second one is promoting growth investment. The first one for strengthening the regional businesses, the strong performing segment Japan will continue to enhance talent to increase engineering capability for further growth. On the other hand, profitability needs to be improved in the overseas segment. Therefore, we will continue to work on integrating the overseas business to generate synergy while setting up horizontal organizations across regional units to foster global competitive edge. I'll explain in detail later. For the promoting growth investment, in order to continuously enhance global competitive edge to sustainably grow, we will especially focus on investing in AI agent. As per the DC business, we will facilitate faster ROI cycle by utilizing REIT to maintain invest. This slide, is this slide all right? I think you skipped one slide. Sorry, let me just cover this slide. So for the growth investment, we are going to enhance global competitive edge. In order to sustainable grow, we are going to invest in AI agent. And you can see the strategic investment in the middle. And as for the use of REIT, we will explain later. We are going to accelerate the ROI cycle. And for the data center investment, we are going to make sure that we have the capacity required for aggressive investment. So seems like this is not right slide, is it? Is it the right slide? I think the slide is not right. Sorry to keep you waiting. So could you go back to the right slide, please? Right. Let me explain the overseas business operations to strengthen regional businesses. Firstly, our so-called TMO project. During fiscal year 24, we focus on corporate functions and IT system integration, which made progress generally in line with the plan. In fiscal year 25, through the overseas business integration, we will continuously strive for creating synergy of 30 billion yen while working on increasing the overall global competitive edge. As shown in the diagram outright, we will form cross-unit organizations to further optimize business operations. Next. So I have explained this, so let's move on to the next one. So in the strategic investment, is it the right one? Right. So regarding the focus investment in AI, which we are going to push forward, in the AI investment, sorry, next page, please. Right. So let me talk about the collaboration with OpenAI. On the 24th of April, we announced this. So we have launched the collaboration with OpenAI as the OpenAI's first distributor in Japan. By the end of the fiscal year 27, we aim to achieve cumulative sales of 100 billion yen. Specifically, we will be collaborating on 4 points described here. Next page, please. As for the data center investment, let me add some more comments. In fiscal year 25, the investment is planned to remain at the same level as the previous fiscal year. Accordingly, both of our sales and profit plans have reflected the year-on-year growth. As I mentioned earlier, in order to drive continued growth with investment as a scheme to accelerate the ROI cycle, we will execute REIT. And this is outlined at the right-hand side on this slide. And details can be found in a timely disclosure documentation submitted to the Tokyo Stock Exchange today. Next page, please. This shows the status of investment profitability and financial soundness. In terms of investment profitability, ROIC in fiscal year 25 is to be recovered to the level exceeding WACC. On the financial soundness front, the net debt to EBITDA ratio at the end of fiscal year 25 is forecasted at around 2.9. Going forward, by using REIT, we will speed up the ROI cycle to control interest-bearing debt so that as we promote investment for growth, financial soundness can be maintained at a certain level. Next page, please. Let me talk about our forecast for the fiscal year ending March 26. FX assumption is 153 yen against the dollar. Next slide, please. So for the fiscal year 26, this is a forecast. Growth in the Japan and overseas segment, as well as the utilization of REITs in the data center business, are expected to increase both sales and profit. Fiscal year 25 is the final year of the midterm plan, and these figures are expected to outperform the midterm targets. Therefore, we will continue to work on our initiatives to deliver this forecast. This breaks down the forecast for the Japan segment. In new orders received, net sales, and operating profit, we expect to surpass the previous fiscal year performances. Next page, please. This is a breakdown of the overseas business forecast. Business segment. Each unit is expected to upscale its size, while REIT will be utilized in the data center business. Therefore, we expect to deliver a year-on-year growth. So that's all from my side.